Yo, yo, yo. Good morning. Dun 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 dun. One minute. All right, looks like it's time, bro. Let's go. Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance, because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Good morning, my name is Wayne. I will be your guide on our journey called Forex. Yeah, we're going to do some technical analysis. We're going to do some fundamental analysis. Sure, I can answer your questions, but the prime directive here is our daily morning routine before the markets open, before the news comes out, and you are ready, willing, and able. So what we need to look at is what's happened in the recent past, what's happened in the far past, what's coming up in the recent, in the upcoming near future, and then in the long run, what could be, should be, maybe, and not just what we think about what we could do to beat the market. We're not here to beat the market. We're here to read the data that suggests what the institutional investors are doing right now, but in general as well. Our goal is not to beat the market, but be the market, which means we have to trade with and not against institutional investors. And of course, most new traders just trade randomly all over the place. So we got to fix that as well. Imagine every single trade you made was logical, intelligent, rational, and aligned with the market. Wouldn't that be cool? Yeah, Forex.Today is a collaboration between Traders and Traders Way. Traders Way is an ethical and honest Forex trader. Forex trader, sorry. Forex broker. Not enough coffee, huh? There we are. Look at that. This is us right here. This is our strategy session. So anyways, I've been working with Traders Way for 11 and a half years. Yeah. Please answer the poll, if you could, please. The poll is, how do you feel about the markets today? What are you doing? What's your intention? Risk on, risk off, very risk on, very risk off. All right. On Zoom. Oh, on Zoom. Nice. Oh, nice. Oh, I forgot. Hang on. Could go through that, but I think I got it open. Don't need to go through the whole login thing. Oh, yeah. I'm already logged in. Now, that one is zoomed in. All right. Although maybe it's not that bad. We'll leave it there. All right. So, anywho, let's get and remember, this is our morning routine. You must have a framework. Well, I suppose you don't must, but you should have a framework and a process. This is what I'm reinforcing here. Now, we do this on YouTube in the mornings. We do this inside of Trade Hours in the afternoon to set up the next day. So for those that are just logging in and you're trying to figure out what to do today on Wednesday, you're already behind. We did this yesterday. So I must emphasize that too. This isn't the beginning of the day. This is the follow-up to the day's plan. So you may already be 12 hours late if you're logging in and you don't know what to do today. Shame on you. Okay, so I just want to put all of this in the context. What is the purpose? We go through the routine so that we're making logical, intelligent, and real-time decisions, not feelings and emotionals and guesses. Let's get an update from Aiden.
Good morning, I am Aiden. Let us get you up to speed on the shifting market landscape as we approach the U.S. session. Today's market sentiment is currently neutral, as indicated by a flat daily risk score, showing significant divergence from the broader risk-on trend seen over the last month. rising U.S. 10-year yields to 4.667% are acting as a primary anchor, pressuring indices and gold while supporting the U.S. dollar index near 99.35. 1. UK inflation slowed more than expected, printing at 2.5% against a 2.6% forecast. South Africa's retail sales surprised to the upside at 2.6%, though its inflation is hitting 20-month highs. Oil prices are taking a hit, down nearly 3% as traders wait for U.S. inventory data. Meanwhile, gold and silver are under pressure because U.S. bond yields are rising, making the dollar more attractive to hold. Biggest movers right now: Brent crude oil, WTI crude oil, high yield bonds, ASX 200, and Nikkei 225 are down.
What? Everything's down, nothing is up. Well, hills bills. So I'm looking at our price cards here, and S&P 500 down, that's risk off. VIX down, that's risk on. Bitcoin up, that's risk on. Gold down, that's risk off. WTI down, that's risk on. Dollar up, that's risk off. 10-year yields, that is risk off. Clear as mud, but in general, we are still bullish. A lot less than we were before, but it is what it is. And there's only one pair out of all the 28 Forex pairs that we track. There's only one that is of consideration. That's Aussie Swiss franc bullish, which is cool because we talked yesterday about the potential of, if you're risk on, you're probably interested in possibly buying the Aussie dollar, even though Aussie dollar was tanking yesterday. So then I'm like, well, if that is your fundamental belief, is if that's what your research is pointing to, then you just sit on tradars and wait for Aussie to turn bullish. Well, that's one signal right there.
Japanese yen steadies as robust Japan growth. Fed hawkish risks offset.
British pound, softer. UK inflation weighs on pound. BBH.
US dollar index price. Forecast. Journey towards 100 ms remains intact amid hawkish Fed bets.
Xi and Putin unite in criticism of US on nuclear security issues. US dollar. Fed minutes to clarify hawkish momentum. TD Securities. Governments worldwide shield households from rising energy costs. Bitcoin price forecast. BTC recovers above 77,000 LUDs as markets hinge on Nvidia Q1 earnings.
Silver follows gold lower as precious metals remain under pressure amid rising real yields.
Yeah, so NVIDIA's reporting at the close or after the close today. All right, let's take a look at how you guys feel or think about the market this morning. You're leaning risk on. Again, 7% are very risk on. All right. 40% are risk off, 53 are risk on, and 7 are very risk on. And for those that are risk off, I think you're thinking too short term. For those that are very risk on, you are guessing. And for those who risk on, yeah, we're flat. So let's just call today like right now, 0. And very, very, very moderately risk on. Remember, this could be 10 or 12 in a smoking hot market. Yeah, this is very moderately bullish, and nothing is going on right now on the short run. So for those that are very risk on, you are not aligned with reality. You might be right. I don't know the future, but there's no indication of that at all, anywhere. Okay. Let me take some of the zoom out. Okay, for those that are very risk on, we would assume US dollar weakness. Dollar is flat. So again, maybe risk on, maybe risk off. There's no way to know if it's flat, but very risk on? No. What about if we analyze many of the most highly correlated assets to risk? And we update this all the time based on what is actually correlating to risk. It's risk off. So if you're very risk on, you're ignoring, I don't know, VIX, high yield bonds, Dow, 10-year yields, NASDAQ, S&P 500. So you might be right, but there's no indication of anything like that going on right now. So be careful. Yield energy's down, so maybe you're going to say, well, that is going to lead to risk on. Okay, yeah, but you're very early. How about that? So you might be right, but we have to look for evidence, right? Right? Use a scientific methodology. Very risk on, you would see very weak yen. We don't have any indication of that, although we have a very weak Swiss franc. That's cool. CAD weak coming down with oil. That makes sense, huh? Aussie and Kiwi are back on. Okay, this is exactly what we talked about yesterday, about how to not just swing both ways like a broken gate every day, but instead have a medium and longer term bias and then wait for market conditions to be congruent with your longer term bias. The example I gave very, very, very clearly yesterday is that if you are risk on or very risk on long term, then you're going to want to buy Aussie and Kiwi. Now, Aussie more than Kiwi. I'm not a big fan of Kiwi, even though it's been performing well. When you look at the macroeconomics, it's mediocre at best. Aussie is much better. So we've been favoring Aussie. And Aussie was a dog with fleas yesterday. I'm like, well, so what? I thought you were a bull. Oh, but it's way down today. Well, yeah, you're supposed to buy dips, bro. You're supposed to be begging for it to be down today so you can buy it and be long all week, all month, all quarter. And that's the difference between, chasing and anticipation. You don't want to chase your tail like a dog. Like a dog, a dirty dog. Aussie CAD's waking up. Oh, yeah, see, it's just tiptoeing into. We have much more conviction on Aussie Swissy. Yeah, so this is going to be play a catch-up, I think. So Aussie is waking up. So, for example, if you are bullish on Aussie right now because you are risk on or very risk on, you would use the signal cards to say they're waking up. Go to the charts. Get ready, go. And these are where you would start first. And by the way, the flashing isn't a glitch. It's teetering on whether we suggest you should care or not. Now over here, okay, we have slight edge as well. Same. I like this one better. So Aussie is waking up. You could just sit on this page all day. And one thing that's nice about this page is that it's only looking at price action. There's no what could be, should be, might be based on macroeconomics or fundamental analysis. This is just pure price action. This is happening right now while you're looking at it. Yeah, this is what is happening. So these are the only two currency pairs out of 28 you should even think about. So you open your charts, bro. Okay. Well, being the Canadian dollar is one of the weakest currencies on the planet, how does that make you feel? And yen is flat today. How does that make you feel? You're basically in a flat to down currency pair. I don't know how that makes you feel. All right, so we got oil inventories today at 10:30. What is my analysis? You're talking to me like I'm Chat GPT. Well, CAD would go up if oil goes up. If oil goes up, S&P falls, right? I mean, I don't know. You're asking such basic questions. Let's just see if I have the specific data that you're asking for. This is a mess. CAD yen. Okay, CAD yen. S&P 500. Okay, so let's see. It has moderate correlation with USD yen, moderate bullish. So it goes the same direction. And euro dollar, pound dollar goes in opposite directions. S&P 500, there's no correlation. So your logic here, S&P 500, it go, blah, 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 blah. There is no, right? There is no relationship up, down, or even sideways between CAD yen and the S&P 500. Okay? What am I trading now? You should know all these things. You should log in every day. Maybe you should subscribe. So I have nothing but carry trades up. So I'm up 2,700 pips on carry trades. Okay, so your logic, S&P 500 up, down, and sideways, and what CAD yen should be doing, mathematically doesn't make any sense. Okay, I have done. So your logic is flawed. Be careful. I'm not pointing that out to belittle you. I'm pointing that out that maybe that was true in the past, but your decision-making process is flawed. It's not based on quantitative analysis. It's assumptions, and you're be careful. Just kind of looking around dollar pairs. Yeah. Swissy, definitely. Well, we know all of these already. Just kind of eyeballing what we know is true. I think that's a INXS song. I was standing, you were there. Bitcoin's got some bid right now, huh? All right, that's good. It was down for a bit. ETH. Ooh, see, we want to see that. We want to see the pullback. Ooh. Ethereum. Doge. Oh boy. Okay, down, up, up. Yeah, we'll call that neutral. I'm okay with that. Ripple, choppy. Cool. Yeah. Ooh, nice. Okay, there's a little dip, but I hope you know that on January 1st, we made a prediction. It's called analysis. We did analysis on the 1st of January. So what, 5.5 months ago? And that analysis predicted or produced the annual high for or the annual conservative target for the Nikkei. Did you know we hit it last week? So this may be bullish, but the reason this is down, and maybe, I don't know the future, but maybe, at least now there's a higher potential for no longer up. Did you know that? I was standing, you were there. Look, on the 1st of January, okay, we predicted this. It's labeled on the chart and everything as conservative bullish target. But we hit it and it stopped. And I bet you a lot of people missed that. Now, if it does turn around and go back up, and I have it all marked on the chart where it would do it if it would do it, and we know seasonally it can go higher, so we already got the next target. So but you should still know that, we're in the danger zone. Dow straight up bearish, huh? Ugh. S&P 500. Uh-huh. Nazi. Chunky. Chunky. Boom, boom. All right. Very, very sideways. So most things are not moving much, although the range is pretty good. It's just this is so down, 2%. 1.23. Okay, so that's stretching it out. So, yeah, okay. But the stock markets, for example, yeah, down towards 1%. Yeah. Raw. Aussie strong. Aussie strong. Cool. Nice. Silver up. Remember, this was a dog with fleas yesterday. Well, keep asking questions. I just answered you were correlating two things that are uncorrelated. That should be a massive level of that's a direct response. Right? Or you're asking me, what do I think about CAD yen? Let's do this a different way. So you log into the database, you click on CAD yen. Okay? CAD yen. I'm bearish. Fundamentally. Done. Why? Here. Load it up. So you have access to this anytime. Like, what do I think? Look, we already have everything displayed. You shouldn't be asking questions like that. Like, what do I think about it? Well, okay. Let's compare GDP between Canada and Japan. Neutral between the two countries. Let's compare inflation between Canada and Japan. Favors Japan. Right? Unemployment between Canada and Japan. Favors Japan. Interest rate differentials favors Canada. Okay, we look at the basket of Canada versus everybody and Japan versus the other G7, and they're basically flat, which we've already covered. Seasonally, yeah, May is an okay month, then June is an okay month, and July is a bad month. And so we're kind of stuttering here as we go from May to June. Okay. It seems like sideways to down. Well, look at the charts. Doesn't that look sideways or down? Okay, so we have an overall score. We look at the Commitment of Traders report, which shows institutional positioning in your pair that you're asking me questions about. You're like, give me a direct answer. Well, we did this on Monday. We looked at the longs and the shorts of this pair, and the market's neutral. We look at retail positioning. It's neutral. Like, you're asking the wrong question, but don't get mad at me. You're focused on the wrong pair. Fundamental, technical, sentiment, none of it lines up. And then your correlation doesn't line up. And you're mad at me because right? So what am I trading? Dude, where were you in the first 5 minutes of this webinar? All right, so how about this? You're asking me, so what should I be trading right now is what you're asking. Dude, look, it takes me 2 seconds. So you should subscribe to TradeRs and then ask better questions. Okay? It's so funny. You want me to open a chart on a pair that makes no sense. That's what you want me to do. Open up a CAD yen, which is a dumb trade statistically. I'm not belittling you. That's not a good trade. So you want me to open that chart and talk about it? Why? Why would I do that? You're probably really good at your technicals, but that doesn't make any sense. So you're like, analyze it. Why? Why would I waste my time? Okay, now you might say, well, Wayne, I'm interested in a swing trade or position trade. Okay. Let's try to look at that. No. Swing trading, you should not be focused on CAD yen. Now, what do you mean separately? Okay. Let's look at this. What do you mean? Like that, to me, that I'm dumbfounded by that too. What do you mean separately? So here's my assessment. The market's not moving. Oh, you want me to analyze the S&P 500? There is no risk on or risk off sentiment, and we're slightly bullish. So why don't I just wait till the daily assessment of risk aligns with the medium to longer term risk? Like, again, you're asking me to analyze something that's not worth the time of analyzing. Okay? This is valuable information. I'm directly answering that you're looking at the wrong thing. And I did it from the market sentiment point of view, from the risk point of view, from the macroeconomic point of view, and even like when I show you this page, it's 100% charts. So you want me to talk about MACD and stochastics and moving averages and Fibonacci and pivot points? Good. It doesn't make sense to even open the dang chart. CAD yen is 0.1 differential. They're both flat. So you're getting kind of upset with me that I'm not directly answering your question. You're looking at the wrong thing. Boom. Okay? That is incredible data. That's incredibly powerful. Institutional investors don't think up, down, or sideways. They're not even interested in it. Okay? Right? So, wow, dude. You need to take it in. You're looking and doing technical analysis that might be attractive to you. It makes no sense. And even then I can't prove, because look, this calculation of here, like, look, CAD yen might be moving, right? Let's say it is moving and you want me to tell you it's a good trade or a bad trade. Let me tell you, this CAD yen is not looking at the CAD yen chart. This data that says there's a void, no clear edge, there's 14 calculations made to make this determination. So you might see CAD yen moving. I don't even want to look at the chart. Because I might get sucked into a trade that doesn't work. But also, logically, outside of the technical analysis, it doesn't make any sense either. So you should be loving what I'm sharing with you. You shouldn't say, go to the chart, don't just show me the stats. It's not worth my time to go to the chart. The only thing you should be looking at is Aussie Swiss franc. And I don't know why you don't ask that question. Why don't we look at Aussie Swiss franc? You want to do CAD yen. It doesn't make sense. Now, if you sit on this page and wait for CAD yen to pop up here, when it pops up here, now it makes sense. Go to the chart. Now you look at your MACD or your Elliott wave or whatever. Do what you want to do on your charts, okay? But sit here until it pops up. But even to that point, fundamentally, it makes no sense what you're doing. Okay? It's not likely to go up or down. It's likely to go up and down. Right? When you look at institutional positioning, fundamentally, it's mediocre at best. Seasonally, it says sideways and then down. And CAD is bouncing around based on oil bouncing around. Oil bounces around based on geopolitics. And geopolitics is non-predictable. Trump can say this, Trump can say that. Okay, so if you are going to be, like, let me put it another way. If you want to trade more like a professional, what we just discovered is professionals don't give a damn about CAD yet. They're in position neutral. It's not the market, the institutional market doesn't care. They're neutral. There's no edge up, there's no edge down. So you're probably better off figuring out what the institutions are doing. And it turns out, like, let me prove that to you. 3, 2, 1. Okay. We can go to currencies. Okay. They're long Mexican peso. Look, I'm long Mexican peso. Did you see that? Peso, 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 peso. I got pesos in my panties. Yeah, panty full of pesos. Aussie dollar. Okay. Those are the two best currency pairs on the planet, according to institutional investing. You want to talk about CAD, CAD's a dog with fleas. They're net short. Okay? So one of the most important things as traders is we have to be able to read the market factually and align our trades. So look at CAD down, okay, net short, yen net short, and you want to trade it. Why? Why would you not say, Aussie yen up? Why not pound yen up? Why not euro yen up? Okay, CAD yen doesn't make sense according to institutional investing. Now, CAD had a little bid last week. Okay, so you might be chasing this, but that's incredibly short term. Maybe it'll lead to long term, but still I'm looking at all kinds of measurements and I can't see that. I have no quantitative rationale that this will continue. In fact, in 6 weeks, I think this will go red. Okay. So, you're looking at the wrong thing. Now, the market is net long the Great British Pound, and they were going longer. So, CAD short, but they bought some. Okay, well, that offsets each other. But they're net long and getting longer. Why are you not focused on pound yen instead of CAD? This is just reading institutional cash flows. How much is in the vault? And are they buying and selling what's in the vault? So again, the CAD yen doesn't make sense. You look at the correlation, they're not correlated. So that doesn't make sense. So I would wish that you say, holy crap, this is amazing, than getting upset with me. I'm teaching you how to trade for free on a YouTube channel. I'm not trying to send out, get rich quick signals and scams and softwares. And okay, let's look at CAD yen. Okay, where's CAD yen? Well, let's put all the opportunities for yens in order. Let me attack it this way. Aussie yen is your best setup. Kiwi yen is your second best yen setup. Pound yen is your third. But we just looked at this in institutional long-term positioning and short-term flows. Guess what? The COT report, which came out last week, said Aussie yen long, Kiwi yen long, pound yen long. Okay? USD yen, flat. Euro yen, flat. CAD yen, negative. And I showed you based on institutional positioning that was the likely outcome. Your trade makes no logical sense. Okay? Now, you might be selling it, but it's not even a good sell. Now, you might be making money on the sell, which is great. Good for you. You better watch WTI if we tickle 100. That could just end. Or Trump drops a bomb on Iran. This down trade will be in a world of hurt. But that's what we see. There's no correlation. You don't have an edge up or down, but up is worse than down, right? Because it's not up now. So anyway, out of 28 Forex pairs, there's only one thing to be looking at. And that is going to make a difference in your trading. Okay? Okay? So I'm direct. I'm brutally honest. It's because I don't have a lot of time with you. I don't even know if you stuck around. But you asked me a question, and I gave you a shit ton of information and data in what I believe to be an eye-opening but educational way. But I certainly didn't mean to insult you. But if we don't have much time, then I need to be direct. So I hope it was helpful. Because if you just reverse engineer everything I just did, it'll show you what you should be doing. Okay? I don't mean to show you what not to be doing, but like if you want to trade yen pairs because you're risk on. Gotcha. Well, these are the top three. Canadian dollar is nothing. Canadian dollar versus yen is nothing. So you'd go Aussie first, Kiwi second, pound third, and that's probably enough. Done. But that takes me seconds. Remember, I taught Aiden, our own large language model, how to trade precisely the way I do. I taught technical analysis. I taught him fundamental analysis. It took me years. Check this out. This is what I think. So you can ask me that 24 hours a day and say, hey, Wayne, I want to trade some yen pairs long. What should I do? Click this button. It'll tell you what I would do. Do these three, pass on everything else. What are the best things to be trading? Aussie yen long, Aussie CAD long, Aussie Kiwi long, Aussie dollar long, and some pound CAD. Those are all long. Or Euro Aussie short, CAD yen short. Okay, now this is doing a lot of fundamentals. So you're like, okay, well, that is what I want to do. Great. It's very long term. And remember, this is bearish, but it might happen in 8 weeks. Now, Japanese yen intervention, not likely if oil is coming down. But if WTI jumped to a buck, let's say over $1.10 for WTI, then maybe Japanese yen does take this down. So what do I think? This is what I think. I look at I look at the COT report. I look at seasonality. I look at the charts for trend and momentum. I create currency indices and do comparatives of the spread between the Aussie and the yen. I look at GDP, I look at inflation, I look at jobs, and I look at interest rates and compare them between Australia and Japan. And this is what I think. 4.53 advantage to Aussie over Japan. That means up. And I do this for everything. So guessing is not in my nature. Okay. So we can do an update here. I think I have Bank of Canada. I think I'm connected to them. Yeah. So the market was worried about Canada raising interest rates and all that kind of stuff, but now we have CPI and GDP and PPI and a couple other things have been coming out, and it's not as cray-cray as people were freaking out about. They're like, oh, there isn't as much as inflation that we were worried about. All right, well, get the data, stop worrying. But what we found is there's probably less chance in the future of a hike. And okay, so what we're doing is we're looking at the entire yield curve of all Canadian government treasuries. And we're reverse engineering the math based on the price that these assets are being sold at. And we can figure it out the implied interest rate. Okay, next meeting, right now, there's an implied interest rate of 2.29. We're at 2.25, right? Yeah, we're at 2.25. So what does that mean? Very little chance of a hike. Okay. And then in July, on July 14th, 2.34. Well, that's also very little chance of a hike. September 1st, 2.71, well above 2.5. Very high chance. And in this case, 100% chance, okay, of a hike to 2.5. Slight chance of 2.75. That's not quite priced in, but remember, this is the aggregate, the average. So some people are pricing in 2 by then, but they're outside the norm. So look at that, September 1st. Between now and September 1st, there'll be one hike, and the mathematical probability based on pricing differentials, the implied interest rate goes up September 1st. And now we can watch the change of this, because this isn't static, it's dynamic. We're looking at the Canadian yield curve for government treasuries and reverse engineering to calculate the implied volatility. And these treasuries sell all the time. So as we look at GDP and jobs and CPI and trade, balance of trade, and all these things that go into macroeconomics and the considerations of monetary policy at the Bank of Canada and the fiscal actions of Carney and his government, we look at all this data and every day we change. Not change, update. And all I'm doing is I'm not predicting that the Bank of Canada is going to raise interest rates on September 1st at their meeting, but that the entire world is watching and negotiating tens of, even hundreds of billions, maybe trillions of Canadian dollars worth of deals. Thousands of institutional investors putting in $1 trillion. And what do they think? So I'm only showing you inside information, legal and ethical and moral inside information of what the institutionals are doing. Teach us more realistic things. Yeah, because I take a long time to explain all these things. So you could just look at this and say, well, the Bank of Canada is going to raise interest rates in September. Okay, that takes 6 seconds. Wayne, what should I be trading right now? Okay, let's do this. You should be trading Aussie Swiss franc. Okay, now go to your Aussie Swiss franc trade. Okay, you can go to your chart, or you can go here. Now we also know our favorite is Australian dollar. And these are the 3 best trades to be doing right now on Aussie. Start with Aussie Swiss franc. We already know. We've known this now for, what, a half an hour or so, right? Aussie CAD's next. Aussie Yen's third. Done. Now open up your charts and do your technical analysis. Okay. Now, you want me to open a chart and show you how to buy a dip? Okay. So I do everything fundamental first, quantitatively. I've done this when I taught myself how to trade 25 years ago. I started with an Excel spreadsheet before I even opened a chart. Okay. So this said here, these, especially if you're risk on, and especially if you like the Aussie, we already know the best trade on the planet right now is Aussie Swiss franc. But if you're like, well, I'm gonna build a basket. These are your 3 best shots. Done. So now go to your charts, buy a dip. And I don't think you really need me to show you how to buy a dip, do you? I bet you're capable of that. Now, I might do it differently than you, but I think we would all do it differently. Now, I can use a limit order. I can use a daily pivot. I could use a psych level. I could use an oscillator. They're all perfectly fine. I could wait for a Fibonacci retracement, but on which retracement? Okay. But they're all correct. But having amazing what was I going to say? Yeah, having amazing technical analysis capabilities, but but you're trading the wrong asset. It's not going to save you, no matter how good your technical analysis is. Okay, so let's just do something basic. We are going to look for day trading bullish buys. Okay, cool. Okay, what time frame do you like? 15-minute or 5? Okay. Where's my drawing tool? See if it'll load. Load in, load in, load in. There it is. All right. So where's our dynamic levels of support? Here, okay, here, and here. A, B, and C. Okay. So if you're scalping, I'd be longing off this 21. So you say to me, well, what if it gets hung up here? What if it doesn't go and make a higher high? Then you're not a bull, so stand down. Even though there's 9,000 things going into saying this is bullish right now, you're worried about it not going up. You don't have the confidence level. That's a whole different thing. Out of 28 currency pairs, each of them doing 14 calculations. So what's 14 times 28? A ton. This is your best shot, and you don't have the confidence to go long. Okay. You're over leveraged. You haven't done enough research. You don't have enough experience. Okay. But confidence is an incredibly important component of being a trader. Okay. Cool. So here's, right? Look what's happened. We're starting New York, but we're already at our conservative target for the day. This is why we do afternoon meetings at Tradars, so that we can try to anticipate this yesterday. And over the next few hours, you're more interested in taking profit than entering your first trade. New York is not the open of the market. Okay? New Yorkers are often shocked by this. Okay, maybe for trading stocks, but not for currencies. So the next best target today is that target. Now we can talk about tomorrow. Well, it's a little early to talk about tomorrow, but I'll tell you what I got now. Let's see. If we go up here, this will come up. So so I'm anticipating the future. It's called planning. Okay. So that is what I think. Done. Okay, this trade is almost over. You still can make some pips. It's all right. If you're just climbing on the horse now, that's that. Okay, we're close to town. It's a short ride. But it's still tradable on a 5-minute. You can have an up, 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 down, down, buy, up, 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 down, down, buy, up, 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 up. And then you go shields up, red alert, because you're ready, willing, and able to acknowledge that short-term traders are going, are profit taking, not reversing. So then it fades down and then closes higher than we opened. So if the pivots are open, high, low, close divided by 4, then that puts us central pivot closer to here. And then that takes us probably actually more like that, because then that would change the range a little bit. But that's the rest of today and all of tomorrow. Going back to the 5-minute chart, We just made our high. So it's not your technical analysis. It's not your moving averages. It's not your oscillators. If you're not trading the right thing at the right time for the right reason, you're just not trading right. Traders will fix that. You can be mediocre at technical analysis. It's okay. Maybe betting on the right horse will help alleviate some of that pain. Oh yeah, and most of this is free. Yeah. So hey, my man, Pescacelia, don't be pissed off at me. Use Traders. Most of it's free. Traders.com, and start making better decisions, and you'll probably improve because you're just better at picking the assets and then going to your charts to trade. That's why I made it free, my friend.